Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream is about integrating Bookmap order flow tools with auction market theory using a tool called the volume profile. And this is done in the intraday developing time frame, taking a top-down, bottom-up approach. Those of you who've been following the stream, I'm going to be showing you a quick look when we start off today with the higher time frame. It's something I don't typically have the time to do, but I thought it was kind of important. I did post this in the Bookmap Discord Trader Lab chat prior to today's open to help our participants get a sense of where we are. And since we use a top-down, bottom-up approach, the higher time frame, and this is something that many traders don't understand, it when you are a day trader, you are trading inside of other time frames or structures, and it's very easy to get myopic and not know where you are in the scheme of things, and also market mechanics and behaviors that can indicate the potential of what might be setting up going forward. So we're going to spend a few minutes on that today, and we're going to move right into today. And again, thanks for visiting the Trader Lab. And if you are interested in some of the work we do in the lab, which is a group of like-minded traders looking to basically improve their opportunity to participate and potentially create a long-term business in trading, you're all invited to visit the Trader Lab. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results, and please remember this is not a trade calling room. This is for educational purposes only. And can I please get an audio and screen check in YouTube and in the Discord Trader Lab? And how's the audio? Are we clean? How we doing in YouTube? Thank you. All right, thanks, Paul. All right, thank you so much, everyone. Okay, uh, the thing to understand in trading, and just as a quick reminder, uh, everything is random in the sense of the outcome. The trading business is like operating like a casino. In other words, the house, and then there's the gamblers. And in reality, if you accept the randomness of the market, any rotation or anything that comes into the market is a random event, just like in a casino where the cards are random when they're dealt and how the gamblers play the cards is random. We're in a similar environment. It takes a mental, I think, a change of mentality to understand what this is as far as trading and how to reframe it so you can mentally adjust to it. Now, we're all attached to the behavior and the outcomes of trades. However, our emotional attachment has nothing to do with the business. So let's keep that in mind. And if you're interested in learning more about that, that's what the Trader Lab and the Bookmap Discord chat is all about. Uh, Understanding the business of trading and then structured trades that you can reverse engineer so you can attempt to be the house and have an only trade or play games with a statistical edge. That is what the Trader Lab is really all about. So let's go take a look here. I'm going to show you the higher time frame. And this was posted this morning and before the market opened. But here's the key things I want to maybe not do do this. Hold on, let me see if I can get this back. Let me try that again. This doesn't work, I'll just keep it like it is. Okay, that solves that one. So, uh, yesterday, if you remember, we had an upside target around 45.14. What this is a higher time frame, and these yellow areas are called micro composites. And all I do with them, and this is always subject to interpretation. There's no, I always get asked, what's the right way to do it? Well, for me, I want to enclose the swings or the volume. I want to see swing high, swing low because that's a consolidation. So as these ranges expand, I'm expanding these because I want to see where the high volume is. So these are fractal. Now I'm not going to spend much time, but you see this here. We had that trend day up, you remember, and then we spent some time up here, two-sided trade. So so trend day, and then we went into balance or consolidation. And we know in consolidations, there's a couple things. There's energy on both sides because they're basically chop. And you'll see this in all fractals or time frames. Well, right here, 67.25 was the high volume in this consolidation. And in many ways, high volume, as you know, if you follow the stream, is retail. That's the fair price. Well, if it becomes too high, and if you've followed the stream, you see me just do the same thing in all structures or microstructures and time frames, or as I think of them as fractals. If the price is too high, and you'll notice we broke away from it, and then we came back to it. And this was the day, this was actually a target on the long side this day, and we didn't get it. That's horseshoes and hand grenades. I think it was 62, and we were trying to get to 67. That is saying, or might say, and you don't know until, hindsight, that's too high. Well, if the buyers won't pay the price, then the potential exists to come back to a lower price down here. And we basically came down here, and this price exists from all this volume, and it was up to here. Okay, highest price. Well, if you extend this price out and you look at the volume in here, it's at the same level. When we fell out of here, we broke below, and then it was yesterday, this was our upside target. And you'll notice we checked it. It's the same as this, too high. Now there's a little more to this, but I want to keep it simple. What did we do yesterday? Too high. Well, as this is too high, and this is the outside edge of this consolidation, what is on the outside edges? Sell stops. If you come under here, where's the next previous retail price in the higher time frame? This high to this low. It's at 64-ish. So this is not a recommendation, but 64-ish is the target. So this is the higher time frame. Now we're going to go into a shorter time frame. And I want to take you back. This is that 45.15 I was just showing you. That was yesterday's target. And this out here is today's downside target. And again, nobody knows, right? This is life in the fast lane. But we shall see. So now I'm going to go into the RTH Open and narrate. I'm just keeping an eye on it. I have something, keeping an eye on my other screens, just so you know. So if I'm a little distracted, it is what it is. So let's take, this is RTH Open. Now, by the way, if you have questions, post them. I'll do my best to get to them. If you're in YouTube, there's about a 10-15 second delay. If you're in the Bookmap Discord Trader Lab chat, let's keep it open for the moment during the stream for questions, and we'll go from there. So this is the RTH Open, 8:30 Central Time. Now, so you know, this is the ETH. Up here was a low volume area. Let me take you back to this. Okay, let me just move back a little bit. I want to show you some structure. And we started selling off in the ETH. Now, this is called the volume profile, and you guys are probably familiar with that. But what does it say? This is the thing about interpreting participant behavior versus indicators. I don't use any indicators. What I'm use is volume, because to me, it's shopping. And you got to always think trading is not about our indicators. And I say us because I'm, much involved with indicators as you guys are. except not anymore for me, but it's okay. The thing is, what creates the indicator representation? What is it representing? Well, it's representing this behavior because the auction is determining what's too high, what's too low. And if you think of the auction like shopping, because what's the market's purpose? To figure out what's too high, what's too low, and what's retail. And when I showed you those high volume prices, that was retail. And if a price becomes too high, the market will leave it. Basically, they're saying is I'm not shopping here anymore. I'm not paying that price. So in the ETH, this is a consolidation. And this is the high volume in this location. Let me just scrunch it a little more so you can see it. And it's saying is this is too high. And then we leave it. And then we start a new consolidation. Okay. And the market rotates. This is what creates consolidations. It's an auction. Oh, I'm not paying that. Yeah, but it's on sale. And as we're crisscrossing, this is the retail price because that's where the high volume is. And if it's too high, we leave it. And then we start the process again down here. So here's what's important about this. Out here was an outside edge, low volume. It's what separates these two auctions. And this is fractal. So I know this is retail. This was too high up here. Okay, and it's called a low volume node. I'm just going to throw it in here. I just want you to see how you can read. And in the Trader Lab, what I do is I share concepts and ideas of understanding how the market works. And I also share structured trades that can be vetted and reverse engineered. Remember, if you think about this like a casino, in other words, gaming, then it's really about statistics and the edge. Remember how the casinos work. They only play games that have a statistical edge. They don't make it up as they go. They don't get emotional. They don't change the game. They build their business on the fact, and it's quote, fact, that over a large sample size of random interactions with gamblers, that since they have an edge, they extract the dollars from the gamblers. That's our business. Now, you can imagine anything else you want about it, but ask anybody who's in the business of trading. They understand it's a random environment and that the only way to create an opportunity is to know where your trade is, where you have a statistical edge, and not to participate where you don't have an edge, just like the casinos don't play games without an edge. So this is our outside edge. So too high, fell out. This is now retail. In this distribution, ETH, this was the outside edge. So this is like the separator, and that's called the low volume node. So now let's go into the ETH. I'm sorry, RTH open. So what do we anticipate in the RTH open? Well, there's a couple possibilities. So we open, we get our seller, we tag our overnight low, which has a over 98% probability. We opened right above yesterday's low. So that's kind of like, this is not exactly dynamic looking, is it? So this is our first downside target. And I'm going to share with you structured trades, not trade recommendations. These are ideas only. But let's remember what happened. This is outside edge in the ETH, and we rejected yesterday at 45, 14, 15 was our upside target, which we achieved in the higher time frame, which I already showed you. And by the way, if you're in the Bookmap Discord Trader Lab chat, you'll be able to review this stream for 24 hours so you could kind of get a sense of how the pieces might fit together. So this, let's watch. I'm going to show you the first trade. And it's not necessarily your trade. It just might be a trade. This right here, when the market opens, what this is this yellow line is called the volume point of control. It's a fancy term for retail. That's all it is. And the yellow, and it starts at 0 volume at RTH open. And then as the volume fills in, this will move with wherever the highest volume is in the developing daily time frame. So right here on the open, this right here, that yellow line is too high. Now what you're going to see is as this right here, anything that's on the screen starting from here forward is only going to be shown in here. This is called a chart volume profile. This is the session, so everything is going to show up on here. But if I zoom in and out, you see it changes what's over here. So let's go take a look. First trade is a short, and this is the target. Now remember, we don't know anything, right? Because it's a random environment. So this is where structured trades might, and remember, the outcome is random, and everybody takes stops. Personally, I'd like to take less, but you know what? I just follow the yellow brick road because the casinos don't want to lose money either, right? They don't want the gamblers to walk out with the cash, but the gamblers do walk out with the cash. That's called overhead, not a personal failure, or they don't get distraught. They don't get revengeful and start throwing the cards up in the air. They don't get crazy. We do because we're emotionally attached. And that's something you're going to have to learn about yourself if you're going to be in the trading business is how do you respond emotionally? It's something we never have to think about in the outside world. So this is too high. And I have this as a statistic. So this is my first trade. Also, this is called value area low from yesterday. It's a potential target also. That has about a 71% probability of getting taken out or getting tested. This. So I know when I open that this is a potential location to look for a short and this is a target. And then I don't know. I mean, like everybody, I'm as clueless as the rest of everybody else because it's not my job to know because I can't. It's random. So right here, I see this. I take a short. My stop is out here. I'm scaled right here. Now, another place to get short is here. These are Trader Lab structured trades. Stop is out here. I'm referencing this. This is my target for another scale, and then I'm holding. Now, I get taken out. Okay, so no problem. I mean, it is what it is, right? So target, scale, or scale, target, hold. Now let me show you the buying. Now I'm going to show you microstructure. And by the way, I can't see your questions while I'm narrating here because I'm looking at a different monitor, but I will take little breaks. But I want to show you these getting us started for the short side of these things. Now remember what I showed you in the higher time frame, right? It was high volume over many days in a consolidation. This is the high volume in our developing daily time frame. In here is volume, chop, chop, chop. It's all generic or fractal. We come outside, we break, we come back to the volume. Think of that higher time frame I showed you. We test it, it's too high, we go south. We come up yesterday, high time frame. We test it. We go south. Is everybody with me? See the fractals. We test it. We go south. Now, microstructure, same thing, volume. There it is. No clue. Don't you wish you knew? What do I want to see? I'm short. I want to see it break down, and this is too high, right? Just like I just showed you. What does it do? It breaks up. Opposite. What does it say? Too low. And then you get this. Okay? Are you guys tracking? Can you see the fractals? I'm trying to share fractals. Are you guys with me? By the way, not to belabor it, but I just have to go back. This is our target. This has been on the chart since we've been up here. This is how the auction tends to work. And of course, past performance not indicative of future results. And it doesn't mean it's going to stop here or get here. It can continue or never get here, right? Random. But this is the price map in an intermediate time frame. And right now the market is trading at 67-ish, 67.5, and we're going for this. And again, not a recommendation. I want you to see how without indicators, which I don't use, that I can read it. So when I see this right here, I know there's trouble in River City right here. So I have a choice. There's a couple possibilities. I can come back here to this volume and bounce off it right here or blow through it. Now here's something else I know. Right above that, this is the opening swing high. What's above the opening swing high? Buy stops. So let's look. So what do? We take this out right here. Let's look. Now this is micro. Now I don't encourage anybody to do this because it takes some competence to do it and experience. I always advise in the Trader Lab that you narrate because this is language. I don't have an indicator. I'm not waiting for something to cross over. I'm waiting to see the change in behavior. So let's just look at it. There's your chop. So there's microstructure or volume right there. That is a price, and think of it like a store, convenience store. There's my buyer. What are these guys saying? You can't buy it here anymore. Now the shoppers are here. What about this price? No, you can't buy it there. Here's the volume. What about here? Nope, you can't buy it there. Going up, right? Who knows, right? How about here? Look, change. Too high, and here's the volume. Too high. There. I'm in the micro. Remember, I'm using a tweezer here, an electron microscope. This is how I use Bookmap, and there's more, by the way. But I'm just showing you some volume so you understand. Because if for an indicator, and remember, everything's random. It's no different than you guys using indicators. I mean, whatever happens, happens. But I can read this change. Because where's my seller? Have you seen my seller? I haven't seen my seller. Where's my seller? Uh, there's my seller. Change in behavior, and now I have this high volume. And that's the same thing as I showed you at the yesterday's high 45.14. It's just fractal. So now what can we do with this? Well, let me show you. If you can read this, if this is now the volume, and there it is, and it's too high because I broke below it, if I pull back to it and I test it and I see my seller, it's a short. Now, where am I going to try to go? Well, let's look down below. Let's just take this one little piece at a time. Now, where this was too low and this was too low. Watch. I just want to show you behavior, and then you can extrapolate. If you got short here, your scale is above here. Why? The buyers took control here. We tested this volume too low, and then my buyers took control again, too low, too low. You see the scale? So I'm showing you this just so you can understand market mechanics. So, and I'm not saying anybody should trade like this. I'm just saying it's fractal. You can pick a time frame and you will see the same behavior. If you were selling yesterday near the high of the day, if you're a swing trader, that would be your trade. You'd get short up in there, you'd put your helmet on, and that would be it. And you'd ride through all the machinations and rotations, and you'd have an airline sickness bag because it was balanced yesterday. Chop is balanced, two-sided trade. It's a consolidation and it's a compression of energy. And when you come out below it, which means under yesterday's low, all those longs that are still sitting in here become, as they say, fuel for the grist. So let's watch. Now there's more. Now this is just a trade. It's nothing more. And that's where you got to scale. Now, where's our volume? Notice the symmetry. Notice the symmetry. Here's your high volume. Okay? There's my, now where was the last place it was too low? It was here, too high, here. Just sharing some ideas. See the behavior, just showing you. This shifts down. Let me mark it. Variable high volume node. At the moment, when this shifts down, I'm looking for it to push off. And so you understand what this is all about is, here, let me just get this thing on here and I'll show you. It's very interesting. This is what why I find, this is why this is all I use. I can look at this and I'm interpreting a language of participant behavior, which is what makes the market up. This is too low. There's my buyer. This is my test. It's still too low. There's my buyer. My seller was here. There's my seller. Where do I come back? I come back to test my buyer. This shifts down. This in the next higher time frame or fractal, which is your developing daily time frame, this is saying too high. Right here, when this volume shifts down, I want it to do that. In other words, same thing it's doing here. In other words, this volume, I'm pushing off. When this drops down, I want it to, now what I want is not material. What I want to see for the trade to continue is it to do this. It does the opposite. See it? That says too low. So, too low, test, too low, test again, doesn't take it out, still too low. This shifts down, looking for the pressure, shifts up. Uh-oh, got to take it out. Too low, north. Can you see? Is everybody tracking? I'm just doing a narrative so you can see Martian mechanics. Are you with me? RP about the scaling is getting risk neutral. In the Trader Lab, we talk about a minimum two lot configuration. And what that's about is the first contract is to buy the stop on your runner. And it does a couple of things. One, if the trade fails, subject to your plan again and what you do, you scratch the trade and your broker sends you the gift basket. If And the other part of it is it helps you manage your emotions because I don't know about you, but an all in, all out trader, I mean, you get this, you're getting euphoric. You get this, you're getting depressed, and you're being controlled and stimulated by your fight and flight response. When you're risk neutral, you have a better chance of holding for a target because the worst that can happen is you're going to scratch. And that's something we discuss in the Trader Lab. So I hope that makes sense. Anyway, so this is too low, too low. We push off, we come out now, and look let's watch the migration. This is the highest volume in the developing daily time frame. These are fractals. This is microstructure. Think Russian doll. Okay, so break high, pull back. Now, too low, potential to go higher. So let's see what it does. I don't know what it's going to do. Notice we go higher. And what's happening here? Too low, migrating higher, saying what's below us at the moment is too low, migrating higher, too low, and subject to your plan, it's either a long or put the car in the garage. Up to you. Too low. I think we had one here. So for me, nothing. This suggests upside. I don't have a trade here because I want to be short. So for me, now this out here is a potential short also. Now these are not trade recommendations. I'm just sharing, remember what I'm doing here. I'm showing you how to read the market, and I'm also going to share structured trades with you that are available for you to reverse engineer in the Bookmap Discord Trader Lab chat. And you don't have to be a Bookmap subscriber. You know, you won't be solicited, none of that. So here's the volume. Let's look a little bit at the order flow. I've got liquidity in the book, and we'll talk a little bit about that. And this is an outside location. Remember, I showed you in the ETH. So I know that if this is an outside edge, that we had fallen out of the distribution which created this, what's at outside edges? This gets I'm compounding some concepts. If I come outside, and remember, there's stops on both sides of consolidations. I fell out of the consolidation, and if you want to review this, and this is why I went over this at the beginning of the stream, um, we can come outside of a previous consolidation, which is in the ETH, and we can take out the stops on the upside of a consolidation. If we exhaust, it becomes something called mean reversion, which means we come back in. So I'm looking for outside in, and I don't know, this could be a short, and where you going? I mean, this is the randomness of the market. I know this was too low. Anyway, let's see what this does. Comes back here. There's my rip. So I'm just reading this. I don't have a trade here. I'm showing you structure here. But my trade is going to be out here. And I am trading in fractals, and I understand. Very confusing. So in the Trader Lab, you can make sense out of this if you put the time and effort in. So this is my outside edge. Let's look. Right here from the ETH. What's above here? Stops. Okay? If you're in the Trader Lab, you would know that. Let's look at some more. I'm going to take you here so you can see. Now, by the way, we're in 5 minutes. Lovely. So liquidity is sitting in the book at 96. Let me just see something here. I just want to see. I can see something here. So my location, whoa, get over here. Sorry, guys. My location is this. Now, that's not a wall. So you understand outside edges of consolidations have stops. So when you come up to a low, this is called a low volume node, which I already showed you, so I'm not going to show it again. But I know there's stops above this. So what tends to happen is when you come up to an outside edge of a consolidation, remember there's two sides in a consolidation. You got your sellers on the top side, your buyers on the bottom side. Okay, so we took out the overnight low already. So we got our buyers on the low side, or our longs who are still sitting. And now the shorts that are in here, their outside edges up above here. I hope that makes sense. Now let me continue. I'm going to try to go quick here because you know, and we're still holding for not a recommendation 64-ish on the positions, which we'll talk about those too. So this is an outside edge. Let's look at it. Here's your liquidity. Here's buy stops. I'm going to show you several pieces integrated, and this is how I use Bookmap among other things. I can see the microstructure, so let's look here. I'm coming up. Now, for me, this is like real estate. You've heard the term location, location. I don't sell this. I understand what it is. Where's my location? It's here, which doesn't mean sell it. It means look or a selling structure. Buy stops coming up. Here's micro volume. What about this? Buyers, no. And I go into the liquidity. I have 50 sell icebergs. I have 38 buy stops. And now the coup de grace, I think, is this. Right here, these are transacting. These buyers, so you see them transacting into this liquidity. That's our iceberg. And this is aggregated just so it doesn't cover everything up with little icebergs. 27 buy stops. So they're taking the other side. 11 buy stops go off. What is that? I call it stop divergence. Now, it's an indication to me of potential exhaustion, not of exhaustion, of potential exhaustion. And let's put the other piece, location, outside edge of a consolidation in the ETH, right? So alignment. Now I'm going, what's next? So I'm looking. And what do you see that looks familiar? High volume, seller. Notice the change in behavior. Buyer, buyer, location, I don't know, exhaustion, maybe, seller, high volume. Too soon to know. Watch. Seller, microstructure, right there, test, no buyer. Seller, short. And what is this called? Mean reversion. That's the mean. Let's watch. Target, hold. Let's watch. What's this? Now I'm going to try to roll along. I come outside. I take these guys' stops out. By the way, write this down. Think like a retail trader. Don't act like one. Where do they put their stops? Here. Where do you want to have yours? Maybe someplace else. Up to you. What is this after we pick these guys out? Volume, 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 break. Do you know what this is right here? Just to make you nutty, because I know you'll appreciate it. We ran. This is an outside edge. Out here. Low volume. What's this up here? The same thing, outside edge in a fractal. I'm now in a developing daily time frame and I'm out here. This is the fair price. If I right here, chop, 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 retail traders are going to put their stops here. If I push outside and take stops, and what do I see out here? One buy stop. I'm taking the weak hands out. That's all. Outside edge. This is another way into this trade, or you're just hanging out from up here and you're ordering your breakfast. This is the mean. This is called mean reversion, or from here, it's the same trade at a different location. I know it's going to make you crazy. And what was too low? This. So this is the mean. So this is the stop pick. And this is the potential short. There's your volume. There's your seller. This could be a short. Why? Because you took the stops above here. Retail trader behavior. Then what do? What was too low? Variable high volume node. It's a target. Why? The shoppers said this is too low at the time. Now we come back. Where do we come? Here. Too high. Seller. Entry here. So you're looking against this, and I'm going to try to get out of this, but I'm just showing you the trades. Not necessarily the trades, the structure. What your trade is your trade. This is a Trader Lab structured trade here. All of these could be structured trades if you vet them, if you understand the market mechanics. This is a structured trade. And, you know, up to you. Anyway, these are all shorts. Let me just see where we're going here. Now, let me show you this. You see this? This is that consolidation like I was showing you in the ETH, right? This is what a low volume node looks like. It's an outside edge, and this is retail, just so you know. When I break below it and I don't come back and it rips, it leaves low volume. That creates low volume because it's the chop creates volume. The rip is a rejection, and the market has the potential to come back into low volume areas, pick the stops, outside edges of consolidation, and then continue. So just so you know. I must be missing something going on here. So this is our outside edge. And where am I in the clock here? I am about 9. Okay, 9 a.m. We have a stat. Sorry about this. I got a little distracted. 9 a.m., wherever the low or the high is, we have a statistic that it has a 97% probability that we will take out the first half hour high or low. I don't know about you, but I'm inclined, considering we're going south of the border, if I was operating, which, yes, in this, I would be aiming for this. So counter rotations in a down move, you're under yesterday's low, you're under the overnight low, opportunities to add or scale subject to your, your behavior and what you are up to, might be part of your plan or not. Or you're just taking structured trades. The idea of the structured trades is to help you learn market mechanics. Okay, let's look here. So we have the 97% probability. Then we have at 9:30 Central Time something called the IB stat. That's the first hour's high or low. And there's over a 98% probability we'll take out either the first hour high or low. And again, considering where we are, I would vote for this one. How about you? So, and that is right here. So it hasn't happened yet. So the volume point of control or retail price, which is saying the highest volume here, is here. That is suggesting everything above us is too expensive and that the potential is to go lower. And I have this stat. So if I come out above, this is my low volume area. So if I come out here someplace, and again, what creates it? The rip. It didn't auction. It just fell and ran. So this is non-auctioned. And this is what low volume is. When I showed you the Globex or ETH low volume, it's the same thing. It's the outside edge. And because this was created by a rip, we can come up into it and then mean revert and come back here. So the trade is called mean reversion and it's an outside in trade. So let's see if we get it. Now we have to look at a couple pieces here. First of all, stops are here and here. This is your outside edge. So it's not unreasonable for us to come out here. Let's see if it does. There it is. Okay, outside edge. Now the tricky thing with this, and I'm not a fan of this, only because it's very hard for me to trade, is that the outside edge? Where is it? That's the joy. But this is the mean. So if you get out here, you have to scale here. So it's a very tight trade. And for most, I would say it's not a good trade because you have to enter with a toothpick and you want to get scaled here. So it's a very tight scale. And, the goal of this is to show you, let me just see how things are going over. Low of the day came pretty close. Okay. Let me just look at this. Sorry, guys, I got to look at my trading workstation over here and see what's going on. Okay. So this is a selling structure at location. But for me, or subject to you and your plan, what is in a risk? Now, these are structured trades. I want to make a point. It's a structured trade. But in a trade plan, you have to know what your risk reward is. And where can you execute? Well, if you get in here, that's no good because you got to be scaling here and then you're holding for this. So it's up to you, Again, trade plan. So this is a short, which you may or may not get involved in. Here's your volume. You can see it there. Here is your test. Does this look familiar? So this is a short. This is a short. Up to you. This is your target and then hold. Because we have a high statistic here. So that's another Trader Lab structured trade. Here's our volume. Let's watch. This is the pullback to the IB. This also is a Trader Lab structured trade. Let's look at this one. This is called the IB continuation trade. Let's look at it. These are structured trades. Here's your volume. Here's your seller. Here's your test of the volume. It's right here. It's a short. Your stop goes above here. You would scale ahead of this low. Up to you, and then you're holding on. You get a pullback. And what is the pullback? Let me explain. If now I'm in a fractal, this is the high volume. So we pull outside. Now in the microstructure, this is the high volume, right? So that's a short. Now I rip and I have high volume here. So this is mean reversion or IB continuation. This is now my volume. Outside in trading, mean reversion. And what it is we are trading structure inside a structure. It's called fractals. And it's trade plan inside a trade plan. There's two trade plans working here. One is we're in a trend configuration, out the window, we'll see you later. And then how do you trade in a trend? Well, this is not where I think is a good idea to get involved. How do you get involved in a trend? Counter rotations. That's what structured trades are about. And understanding market mechanics. If we come to an outside edge somewhere, and this is a little hard because it's mean reversion, this high volume is the mean. So we come outside, we want to boom. And where's our target? Remember, we're going here, right? And that's what I showed you before the day even started. And let's look. Too high. Outside. Somewhere. Mean. So if you come outside, you're looking for a short. Break low. Pull back. Now this, you want it to hold this and push off. What do? We come back to this volume, and I'm almost caught up. You see the behavior, guys? Volume, there's my seller. There's my test. It's another Trader Lab structured trade. It's another short. You're going for, for this. I think we're going to be current now. Yes. Questions, and I apologize, but I wanted to get through it. One of the things you're going to find in the Trader Lab is, hold on here. Did I miss something in the Trader Lab? Any questions, guys? Now let's look at this. I'm in real time. These are not trade recommendations. High volume microstructure. High volume in the developing daily time frame. Too low down here. So let's watch this behavior. This is not a trade calling room. I'm just going to share ideas. So what do we know? Let's talk about what we know. We know in the higher time frame, this is too low and a target, which we may have achieved, right? Just like yesterday, that 45.15, I think we missed it by 1 or 2 ticks. Well, there's no precision in trading, guys. I use the term horseshoes and hand grenades. So what do we know? In the microstructure, this was too low. In the higher time frame, this is too low. There's my buyer. There's my test. Now, this was too high. And this is retail. So I can come here, bounce off here, and continue down to here. Or I take this out, and now we squeeze, because this, and nobody knows, by the way, stops are going to be above here and potentially at this outside edge. So we have to be conscious of this. So before anything happens, this is the way it works with a trade plan. You already know what you might do if it shows up. You know this was too high because we got our sellers. We also know the planet is short. So we have buy stops here, and that's the outside edge. So and there's stops above here. So we have stops here, here, here. So that's what we know. If I can't get above this volume, I can rotate down and possibly come here. If I do get above this, we squeeze. That's what I know. I don't know what it'll do. So the idea of managing a trade is to have all of this vetted before it develops. and you anticipate to participate. In other words, what will you do when such X happens? I use a conditional statement or a series of conditional statements, and it goes like this. If this, then that. If not, then what? If I come back here and here, and I don't break above this, if this, then that. If I break above it, then what? Then north. So if this, and I come back to high volume test, then that, seller. If not, in other words, we take this out, then if not, then what? Then squeeze, squeeze. Everything else is random. So if the trend is down, and I may have hit my target, this to me is like a direct hit, you know. So my target might be done. I don't know. It's not my job. I can't know. But here's what I know. This was too low and I got my buyer. So I know if I take a short here, and this is not a trade recommendation, remember guys, I know my buyers were activated and this might be too low. So if I take a short, I got to scale before this microstructure, before this volume, which is there. So if you took a short, you're looking at this, not a recommendation. Then you are holding and managing the trade. So that's when I talk about a two-lot configuration is if you get short, not again, not a recommendation. There's your seller, there's your test. You see this, so this is an area, your stop would be above here. This is just an idea, not a recommendation. And your scale has to be above this volume. So, you know, if you can operate in this, that's fine. If you can't, it's not your trade, you see. So I'm just saying. And to be able to think like this takes practice, and it's like learning to read music or speak a foreign languages. I used to think of it as dancing, you know, dancing with the market, you know. But this is language. So, and if when you think, I think of indicators, you know, and I like you guys, you know, I grew up on indicators when they first came into the public space. You know, I started trading in 1980, and really we didn't even have computers back then. You know, we had terminals, and so basically, when we first got something that you could actually have multiple time frame charts and all that, it was pretty exciting. We had Wells Wilder. So you see, this is our where our buyers were activated. So this is where you gotta be thinking of your scale, you know. So, and what I typically think of when it comes to this, if I get in here and my trade fails here, and if it comes over here, these guys are going to be on the hook also. It can feed on itself, right? Squeeze. Remember. And if it does, I already know where my next trades are. They're out here or here. You know, they're going to be out in this area because I know there's stops here. So we'll watch what happens here. So if I get in wherever it is and I fail here, I need to cover the range to buy the stop on my runner. And I'm only assuming a two-lot configuration. Okay. And that scale would have to be in front of this volume. Now we didn't quite get there, you know, may never get there. What happens is it's random and you might take a stop subject to how you manage your trade. But let's say your range from entry to here, whatever that is, 70 to 71 half, 72, you know, 6 ticks, 7, 8, pick one, right? So that's what you need, 1.5 to get risk neutral. Your stop stays here because we know if it comes up here, it's going to light up the sellers. And if it doesn't come up there, then we can come down here and then potentially here or not. So we'll see what happens. In the meantime, let me see if you have any questions, okay? Yeah, the short squeeze is possible. Are you guys with me? How are we doing? Want to come back to the higher time frame while we're waiting for this to ferment. It's very important, guys, and we discuss this in the Trader Lab. And unfortunately, I don't get time anymore in the stream, but there's a library of webinars in the Bookmap Discord Trader Lab chat where I used to stream like 4 hour streams with real-time narration. I don't often get into real time, but this is what's important. This was yesterday's high target and we rejected it. Remember, shoppers, I'm not paying that. If that's too high, then where's the last place? It was too low. 64. That's why that target is sitting there. So I want you to understand. And this is a consolidation. When you come out of a consolidation, remember, sell stops are under here. So all that energy is released. That's what gives you these big moves. So this was the last shot for the longs. In fact, the day before, if you remember, that was a pretty neat day for us in the Trader Lab. This was what's called responsive buying. And if you remember the stream yesterday, I said we anticipate, and it was nasty because it was choppy, it was disgusting. It was a hard day to trade because of the chop. But ultimately, we got to our target, and market had to take this out to come back into this range. It failed. That's why now, and this is day trading, right? But every trade starts out in as a short term. And some people might say, whoa, that's a scalp. I'm going to say, no, it's a trigger. Because I don't personally, it's just personal, I'm not in for taking a lot of risk. But this could be a short if you're a swing trader going for this. This process is generic and fractal. Short to here is what this is. So if you put a trade on or an option trade, I'm not making any recommendations. I'm just saying this is the same process. 45.14 or 45, pick one, down to 64. I think that's pretty good. I don't know. What do you think? Just saying. It's all fractal. So if you understand how the market works, you might be able to do this in any time frame that works for you. So too high, there's my seller, and we can still come out. So, and let's anticipate. Too low, too high, seller, too low, back to the mean. This is called mean reversion. It's two-sided trade. Who's on the other side? Buy stops, buy stops. Where's the next location? Outside edge, back to here. I already know where the next trade might show up. It really depends on what happens right here. So if we start squeezing all these guys in these shorts in here, 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 will get taken out. And personally, other than, a trade I might be nursing, as they say, it doesn't matter. In fact, and it's not a recommendation, if we come out here, it actually presents an opportunity, at least to come back here and then maybe wherever. Any questions? Are you guys tracking? Yeah, DNT matter. RP, I'm not sure what you're asking me about the scale. Yeah, what the scale is about, RP, is early on, I think a lot of us, when we stick our toe in the water, we think we just want to trade with one. And that's really about risk aversion. Let me just check it out. In the Trader Lab, what I suggest is, like, in other words, I have 60 PDFs that I've shared, and I'll show them to you later, a little later on in the stream, that everybody can have. And they weren't, I'm not a vendor and it's not a trading course. I just kind of threw these together. It wasn't, this is before Bookmap asked me to stream. And because I used to post typing these concepts in just a chat, the Discord chat, futures chat. And it was like an encyclopedia. I was typing. And they started to actually took pity on me. And they said, well, how about you just throw some screenshots and stuff together and annotate them? I said, yeah, that'll be a lot easier. Except it wasn't really, because I did them in tremendous detail. And also, I work with Bookmap developers with ideas. I'd say, guys, let's try this, that, and then they'd whip something up for me, and then I'd throw it on there. So some of the stuff that's on there is either not in use or has been incorporated into other bookmap tools, which is not really material to the conversation here. But so I work with the developers, and just sort of those are in there also, which can be distracting because you're going to see stuff and you're going to go, "What is that?" Um, it was ideas on order flow and some other things, ways to detect anomalies and different behaviors. So remember, this is our high volume that the buyers came for. That's why this is an area. If you took these shorts, remember, too high, short, pull back, short. Where's support? Here. Remember? I know you're paying attention. So if I got short here or here, because these are all Trader Lab shorts, I need to be scaling here. Why? My buyer. And this is too low in the microstructure. Now, if I take this out, potential to get to this liquidity or not a recommendation. Are you guys tracking? Can you see how you can use this? Now, I'm mentioning the PDFs because all of this is in the PDFs. Circles, arrows, and ideas. Now, the thing to understand that's very hard for us, because when we grow up in indicator world, we're really kind of looking for red light, green light, you know? In other words, it says this, I do that. I do it a little differently. I narrate and I use conditional statements. In other words, if this is too high and I see my seller, then lower. If it comes back to where the price was too high, which is this volume, I can sell it. My risk is above here. If you vet this, by the way, if I come back here and this is too high in the next higher time frame, think Russian doll, and this is too high in the fractal, I can sell it. Where's my obstacle? You will remember it is here. How do I know I need to scale here? Because of the volume, and it's like a little store down the street. They call them a convenience store where I am. They're convenient, but you pay. Well, the other possibility is this price might be too low and you can't buy it here anymore. But now we come back in the fractal to the next higher developing daily time frame, and this might be too high. Too high, think Russian doll, too low, microstructure. So I'm trading multiple fractals inside of each other. Probably will make you nutty, but I'm not waiting for any indicator or line to cross over to tell me what's going on. Indicators are fine, but all they are backwards looking measurements of price and they're lagging. Do I really need something to tell me the market's going down? I don't think so. I could figure that out. Do I have something that tells me where I might anticipate a reaction and why? Do I know why? It's not because my oscillator or moving at or something crossed over. It's because I'm interpreting what the participants say when they say this price is too high. I'm anticipating when we come back to it that it's still too high. And basically, the language is, I'm not paying that. What are you, crazy? I'm leaving. We left the store, but you like to shop here. So you come back to your favorite store and you go, I'm not paying that. This is like $10 a pint for ice cream on a Saturday night. You just might refuse at some point. Well, right here was too low. So if I get short here against this, that's too high. I got to scale against what was too low. Why? Because we might come back here. And if I don't and I take it out, then I'm on my merry way. Does that make sense? Um, I'm not sure about this question about weak shorts being squeezed. Something you're asking me to. I'm a little confused. Are you speaking to me or somebody else? So if you have your stuff together and you've developed a plan, these are ads or whatever. In other words, if we were in a vacuum to a certain point and we weren't in this configuration where this is our target and maybe below, um, if you understood statistically what your probability was, you could be shorting this, you would be shorting this. You could be adding, scaling, and targeting. You could just be targeting this. This is my target, not a recommendation. And shall we say, let me just get this thing taken care of over here. This is called trading in fractals, guys. This is basically, there are no mechanics in the sense of this crosses that or something does something. No way. It is behavior. It's what the participants said. It's not what you think or I think. It's our opinions mean nothing if we're going to be traders. Thinking where the high or the low of the day is means nothing. What the way it works in trading is gaming. And that's what I said at the top of the stream. And I really want to bring you back to that understanding. It's all random. It's all maybe. And this is our target. Now, to me, this is pretty close. I'm good with that. Now, if we get under it, we can just keep going. Or we can break under it, come back above it, and come back here. And we might just come back here anyway, because this is the target. Now, let's go back. This 64. 64. Too high yesterday, 45.14. Swing trading, bing, bang. And of course, like any trade, you know what can happen. I don't have to tell you that. This up here, too high. See you later. That sets up the return to this. And this back to here sets up the return to this. And there's a possibility and then we have FOMC tomorrow. Just be sure to carry a helmet with you for that. And subject to what happens, we can come out, we can do anything. But this is a low volume area out here. Remember how I'm showing you fractals, how we go low volume to low volume? Get over here. Low volume to low volume, high volume, see, outside to outside. And remember why the scale was here? It was too low in the developing fractal. You see the behavior here? That's why you would scale. And this is our target. And I would say it's been a good morning for Trader Lab if you actually have a plan and you vetted it. How we doing in Trader Lab, guys? Has this been a productive day? I'm getting thumbs up. Oh, great, Rod. Yeah. Now, everybody was, so you understand if you're visiting in YouTube, I'm hoping that you see there's some value in having a process that is more based on understanding how the market works. Oh yeah, we anonymous trader. Hi. Yeah. No, I keep a very close eye on the NQ, and I traded NQ for years. But for the Trader Lab, the ES has depth, so it's it's better. NQ, it's so thin. You take a stop in the NQ. It used to be when I was trading them. Um, they'd call you back like next week, and yeah, we'll let you know where you got filled. We'll see you later. And because it's so thin, risk management is a different animal. So for the Trader Lab, I stay focused on the ES. It, but everyone should understand, if you can understand how the market works, you can take this and overlay this process on any market. All you need is that volume. And and every market has its own idiosyncrasies and certain behaviors. But it doesn't matter. Trade crude, metals, pork bellies, if they still trade those things anymore. Um, it's all the same. I mean, I've traded across all these different markets. It doesn't matter because the market is an auction. Ultimately, the auction, what the market really is an attempt by the participants to find out what's too high, what's too low. And the way they do that is they check. Too high. I'm not paying that. Seller. Oh yeah, absolutely not. Okay, well, where was it too low? Well, it was over here. Let's get a scale here. Okay, now where does the trade fail? Well, if it comes back over here. Now in the next fractal up, the daily time frame, this is very nuanced. This is the highest volume for the day as it's developing in that yellow line I showed you at the top of the stream. This is called VPOC migration. It's saying there's pressure. So volume and price are moving together. Now remember, anything can happen. I mean, look, it came down here and we went up. Huh. But I didn't have a seller here. I had a buyer here. We checked this. It came outside. Boom. Now there's my seller. Oh, that's nice. What was too high? This. Where do I come back? Here. That's a short. And that was a short. So short, seller. Where do I come back? Here. Seller. See? Where do I come back? Here. Seller. What was too low? This. Scale. Hold. Helmet. Now you got right here, I can't tell you where the high or the low of the day is going to be until the end of the day. Just in case you're wondering. No clue, not my job. This is key. Right here, I'm going to say might, and it's not a recommendation, be done for the day. For the downside, we can potentially go into two-sided trade here now, or not, or just continue with the Acapulco cliff dive. Nobody knows these things. Or if somebody does, they haven't called me yet. So I just follow the yellow brick road with a structured trade plan and take the trades to show up. And I think like a casino. I absolutely have, as best I can, separated myself from thinking I know anything. I only know market mechanics and behavior. I don't know what will happen next. See? So, and that's like the casinos. They deal the cards, they're random, and the gamblers play the cards randomly. They don't know what's going to happen either. What they know is because they have vetted edges and they're not emotionally attached to the outcome like we are, they actually execute their games to extract their edge because they're disciplined. We get all kinds of nutty. And we're wired to be nutty, fight and flight, revenge. If you start taking losing trades, which by the way, it's easy to talk about randomness, but emotionally, it's not easy to manage yourself when you're being triggered with thoughts. When you have that thought in the back of your head that says, geez, I want to make it back because I'm down, you're in an emotional state already. And you have to, in part of understanding the business of trading is you're going to learn things about yourself that you never had to really look at before because those things work in the outside world. In the trading world, just like in the casino world, those things don't work. They don't change the game. If somebody walks out with a suitcase of cash, they don't make the games up. They don't play games in the middle of nowhere where there is no game. They don't do any of that. And yet they can give you the ticket to the buffet. They can give you the cocktails. They can comp you. They can fly you in if you're a high roller, comp your hotel room, get you tickets to the show to see Adele or whomever, all of that. And they still make a profit and build larger and newer, beautiful, lavish casinos. Why? Because they are disciplined and they have an edge. This is what the business of trading is, and this is what the Trader Lab is built on, helping retail traders understand what the real world of trading is, not the fantasy that we all come with. We don't have ATMs in the basement. What we have is a random outcome. You only need one trade to learn how to trade. One structured trade that you can develop the discipline to execute. One. All you need is one. And if you come to Trader Lab and you want to work on 5, beat FOMO. If you can have the discipline to develop one trade, you can build it out. It's process. So, and if you want to think of it, it's like in business, they have pilot projects, you know. You do a pilot, and that pilot creates a template of process. I'm very process oriented because I need structure for discipline. If I don't have process, I don't have discipline. So it's very formulaic, not mechanical, but formulaic. So if this, and it's done in a conditional statement. When I built trading systems, which are the ultimate opportunity to curve fit, by the way, it was all conditional statements and then branch logic. So I've really taken the same concepts in a very simple way and just do the same thing. You know, if this, and I get a retracement to here, then that. If not, then up there. If I break here, so if this, then back to here, then that. If I don't hold this, then what? Well, if I do, then what? Then that. These are shorts in the Trader Lab. I mean, there's no ambiguity here. It's just random, right? And coming under here, not a problem. Now, right here, not to make trouble, but right here, you notice the behavior. You notice the break high. You notice the pullback. You notice the break high. You notice the break. What is this? Isn't this a short? Not a recommendation. Can anyone tell me why this might be a short? Let's think in fractals. Let's take a wild guess. How about in YouTube? Why would that be a short? Clown, step up. Don't be shy. Why is this a short, not a recommendation? Think Russian doll, fractals, multiple time frames. If this is the developing daily time frame and it's the highest volume and it's a short, if this is the microstructure and it's, let me start from bottom up. Microstructure, short, in alignment with developing daily time frame. I'm in multiple time frames as you think of them, but it's fractals as I think of them because there's no clock involved. The word time is trying to fit something humans created around the market. The market does not care about our 5 minute, 15. It just doesn't care because it's not a function of the clock. It's a function of the participant behavior. It's just it's the way I look at it. Because I used to, just like all of us, break it down by time. 5 minute, 1 minute, 2 minute. Well, what does that have to do with this? There's no clock here. It's behavior, seller. So that's my thing. Now this right here is the developing daily time frame, and this is the same thing in the fractal. So I have multiple time frames. This is too high. This was our target coming down. I break below it and I return to it. Possibly, not a recommendation. This is too high. This is too high. It's not a trade recommendation. And that, and it's just maybe, is the same as this. Let's see what it does. And like everything, it could go wherever it goes, it goes. Now, from the higher time frame, the trade is over, okay, because that was the primary target. What we want to see here is the behavior. And we'll just keep an eye on it, okay? It's not a trade recommendation, guys, because this is rather esoteric. So let's watch. But the reason I wanted to point it out to you is it's everybody talks about multiple time frames. We're all, and I understand, right? Because I am trading multiple time frames too, but I'm doing it from a different angle. I'm doing it based on the volume. So what I know is These areas up here were too high, and this was too low last time I was here. So the market, in the market, these are not rigid, these are not walls, they're areas. So the market could come under and come back up and come back here. If it does that, then that's that, and that's the end of everything. Or we come back here from underneath, which is the same as this from underneath in a fractal, and we push off. So we'll see what it does. We're just tourists. And in the meantime, do we have any questions? Pull back the volume. That's right, Tony. So this is a VPOC, which is this, which is that generic. In other words, fractals. So I trade in fractals, right? So this is the volume in this structure. This is the same as the volume in that structure, which is the same as the volume here. These are all, and as you guys think, multiple time frames. So if this is still too high, and I don't know, but look at what I've got for structure. If this is a short in the trader lab, and that's a short in the trader lab, and this is a target in the trader lab, and this was too high, I break down, there's my seller. Now, if I come above here, it's going to come back here. That's it. If this, then that. If not, then what? If this is too high and I have my seller and I hold this area, I can come down. If I come back above it, I can come back here. That's all I know. I don't know anything else. And quite frankly, I don't need to know anything. It's because I can't know anything else. Right here is my microstructure. You can see it right there, HVN, and this was too high. So if I come up above here, I'm going to return here, and then I'd be done, you know. And I'm not saying this is a trade. This is not a trade recommendation because we're starting to come out above. So that's too low. This was too high, and our stops are above these swings. This is an outside edge. This is the retail price, and then we can go into rotational trade. It's still workable. Now remember, this as you go up in time frame, it's sloppier. It gets looser. So the fact it's like this, not necessarily material. It could come, remember, this is trading. It's just horseshoes and hand grenades. So at the moment, I'm looking at this. This is too low. This is too low. This was too high. This is too high. So potential now to come back here, mean reversion. So if you got in, I wanted you to see it because I wanted to see if we held it. That's why it's not a trade recommendation. It's not a trade I take because this is my target, but it's something I thought we could look at and just see. So we'll observe it and see what it does. See, the main volume is here. So this is retail in the developing daily time frame. If we come out here, this is a Trader Lab structured trade. Out here, low volume node, stops are going to be up here potentially, and then this would be the target. It's called mean reversion. If we can't get back here and we're in this area, we can still come down, but I don't know. It's not my trade really. But I was kind of thinking we might get out here and then reverse off, but looks like it's not going to do that. Let me check your questions. Let's see. Let me show you these in the meantime while we're looking at that thing. I think I lost something. I was referring to these. I've got about 5 minutes. If you have final questions, why don't you throw them in the chat and I'll do my best. Whoa. This is what these look like. These are just screenshots I took along the way. And I had posted these in, years ago. These go back to 2020, 21, like this, 2020. And they're just things I kind of threw in the hopper. And some of these are these structured trades, and there's others. But basically, what in explanations, what's the rationale, for this? Why? And some of this doesn't exist. They were ideas that got incorporated into some things. So you could download these, and then there's a library, probably about 26 webinars. I suggest you watch the first one as a primer webinar. It gives you an overview of this process and also the business of trading. And there's the one right under that is called Winning the Day Trading Game. Uh, and it's really about understanding that we're in a gaming business. We're not in the video gaming business. We're in a business. And to separate how you feel and manage, I should say, because we all feel the same stuff. You're not going to, for years, I always thought Spock, you guys know who Spock is, right? And no emotions, strictly logic. I wanted to be Spock. I wanted to separate myself from my emotions, not feel them. And I tried everything. Behavior modification. I had a big thick rubber band on my wrist. I would snap it every time I had a thought, like, oh, I better get out. Snap, all that kind of stuff. And that didn't work. So then, it really, uh, what it was then, I said, okay, what triggers my responses? And what am I going to do when I recognize it? It became more a recognition of response, you know. And once I began to, and you get this by journaling, or you could use a tape recorder or even OBS software or something where you can annotate. And then you want to go back and you want to look at your errors. In fact, back in I think 2012, it's hard for me to remember this stuff. I came up with something. I was talking to a trader. And we were talking about errors, and I said to him, I said, "Have you ever thought about what it really costs when you make an error? Because most of us we make an error, either whatever those are, and you can define them because they repeat. Moving to stop, bailing out, all that stuff. What does it cost? Because most of us just go, and you're on to the next trade. Well, I said, let's do this. Well, I figured out what my errors were costing me. And I'll give you a sense of, and I was doing fine. Thousands of dollars a month, sometimes thousands of dollars a week, just because. And it was like, it blew my mind because all those dollars were already in my hand and I was giving them away. I wrote a check out for the amount, like for a month of errors and what that dollar amount was. So I created something called an error cost calculator and I hung that up on my monitor. I want you to know, next time you feel you do that, next time you have those emotions, you're going to look at the price. What did it cost? And I'm not going to tell you I still don't make errors because I'm still human. But I will tell you they happen a lot less frequently. And the other part of that is because of scaling and metrics and knowing that I'm in a random environment and that I'm going to get taken out, I'm going to get stopped, that whatever can happen will because it's random, just like the casinos, that helps also. So I accept what the business is. I understand my weaknesses because of my wiring, not because I'm not smart or something. I'm just normal, not exceptional in any way. So I just had to understand the consequences of certain behaviors to my business. And then I changed as best I could and reduced those errors. So that's what the Trader Lab's about. Understanding the business of trading, having metrics and a trade plan. You're all invited to visit the Trader Lab if you haven't. There's a lot more to it. It's a community of like-minded traders looking to leverage our collective experience to create something better. The business of trading is quite different than what we think it is. I can suggest that. I see we're back to VPOC. You want to watch this. We're back to checking retail in a developing daily time frame. If we fall below, we can come back to that 65-ish below. If we push above, we're going to squeeze and come to the outside towards the initial balance low. Okay, that's it. Don't have anything more than that. If you got, by the way, this stream is available to everyone in the Bookmap Discord Trader Lab chat to review for 24 hours. If you're interested in that, If you're in the Trader Lab, that's something that's available exclusively to you, plus ongoing narration when time permits, in between my other business duties. So I hope you got something out of this. If you're in YouTube, a thumb up, and there's a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab chat. You don't have to be a Bookmap subscriber. You won't be solicited. And there's a lot of additional free education. First of all, order flow to the max using a high tier tool like Bookmap. It lets you see inside. Uh, and I didn't get Bookmap to 2015. I've been using this process that you see me doing here for many, many, many years. Many. I learned market profile from Peter Stottlemyre, who created it in 1985. And I'm going to tell you, I messed it all up because I decided I'd be smart and used indicators with market profile. And all I did was, I think the term is disaster. So I figured out that might not be such a good idea. Why? I wanted certainty. My emotional needs were to compress risk. And I did the same thing in trading systems because I came into this business with the belief that I could, really reduce and squeeze risk out. I mean, in business, don't you want to reduce your overhead? Well, I thought, and that's losses. So I thought I could do that. But that doesn't fit in this business. The casinos cannot reduce losses. What they do is they play games that have an edge. It's a different business, you see. But I didn't understand that because when I started, there were very few off-floor traders. Everybody was on the floor. So I'm just saying is I came in with beliefs that were defective, but I didn't even know that. It took me a long time, unfortunately, and a lot of tuition to figure out what I was doing in spite of how hard I was working and how many times I thought I finally had it. And then I'd wake up with Trader Groundhog Day, I'd have the same outcome. I was random in a random environment. So even though my account would go up and down, it was just like gamblers, make money and give it back, make money, and it was the same, right? So it took a long time. And fortunately, you guys don't have to spend that much time as I did. I've been doing this 43 years. So it took me a lot longer than it should take you. But the problem you have is you have so many inputs, so much information, and human nature being what it is, you're going to run to the different side of the boat every 20 minutes with the latest idea, the latest, oh, here's all you need, do this one thing. If you haven't figured out by now, if you've been in the retail space, the outcome for retail traders is abysmal at best, and they're all doing the same thing. I think it's unrealistic. It's just an opinion, not a recommendation, that if you're doing what other retail traders do, that you should not probably expect a different outcome. If you're interested in just kind of on your journey, stopping by and seeing what's going on in the Trader Lab, you're all invited. Please give a thumb up in YouTube. Thanks for visiting the Trader Lab. Appreciate you guys stopping by. This is really market mechanics, how the market works, and structured trades to interact. And the way that you create a business in trading and have at least the opportunity for longevity is knowing that you should only interact with the market where you have an edge. No different than how the casinos interact with the gamblers. Thanks again. Appreciate you. I'll see you guys tomorrow. Trade safe.